All right, guys, 3-3 work together. Don't forget about your normal balance. Debit normal balance is when the debit side is the increase side. That's expenses, assets, and drawing. Your credit normal balance is when credit increases. So owner's equity, income, liability. All right, we've got our transactions here, and down below we've got a journal that we've already started filling in. Don't forget, you've got a special column for sales credit, and we have a special column for cash, debit, and credit. If the accounts you're using are not sales credit or cash debit, cash credit, then it all goes in the general column. Remember, you will not write the word sales or cash when you're writing down your account titles because they're already written on the journal, so you will not write them again. All right, our first transaction for today is April 12th. We paid cash for rent, $650. So we come down here, you've already typed April, so all you have to type is the 12th. Paid cash for rent. You can look at your chart of accounts. Our rent is rent expense, and paid cash is going to be cash. So our account title is going to be rent expense. Paid cash means cash is going down, and it is going down by $650. So cash is an asset. The normal balance for assets are debits. That's when it's an increase. So if cash is going down, it has to be a credit. So in our journal on this line, we're going to say a cash credit of $650. So our debit is expense. Expense is not one of the special columns, so it comes over here in the general column, $650. And our document number is C4, check number 4. All right, next transaction on the 13th. Received cash from sales, $2,500 with a tape, a calculator tape, number 13. So received cash, that means cash is going up. The normal balance for cash is asset, or cash is an asset, the normal balance is debit. So cash is going to be a debit. So what's the date? 13th. So on the 13th, our cash is going to be the debit, $2,500. And our credit is going to be sales. So right here in the special column, sales. Now notice we used cash and we used sales. So we should not be writing any account here. But you can't just leave it blank. So what you do, if you click on that box, there's a down arrow with a check mark. And that check mark means that we used both of the special columns. And our document number was T13. Okay, so that's what you do whenever you have two special columns, sales credit and cash debit. All right, next transaction is the 14th. Sold services on account to K-Spa for $480. Now, this is very similar to one we just did. Sold services is the same as sales. Just because it doesn't say that exact word sales does not mean that sold is not sales. It's just past tense. So we have sales here of $480, and we know that when we make a sale, it's a credit. So that means our accounts payable has to be the debit. And sold services on account, it shouldn't be accounts payable, I'm sorry. They owe us money, so that should be accounts receivable, and that's an asset. The amount that they owe us is going up, so assets, the normal balance side, is debit. So accounts receivable to K-Spa is going to be a debit. So sales credit of $480. Okay, so on the 14th, we have a sales credit of $480, and then our accounts receivable is the debit of $480. Now let's make sure we write it correctly. So we're going to go to our chart of accounts. Accounts receivable right here, accounts receivable dash K period spa. Okay, so type that in. Oops. And our source document source number is S1, sales invoice 1. I don't think it matters if you capitalize it. So we've got our sales credit and our general debit. All right, next one. On the 19th, pay cash for electric bill. Let's look at our chart of accounts. Electric bill is going to be a utilities expense. Okay, so 19th, paid cash for electric bill. So on the 19th here, we're going to say utilities expense. And it was a check number, check 5. And the amount is $220. So if we're paying cash, cash is going down. So that means cash is a credit. I already forgot how much, $220. Okay, so if our cash is a credit, the debit is utilities expense. So it goes under the general column, $220. Oops. All right. On the 20th, we received cash on account from K-Spa, so they're paying us part of what they owe us, $255. When we receive cash, cash is going up. That's the normal balance for an asset, so that's a debit. So cash is going to be a debit here, $255 on the 20th. So cash debit of $255, and our credit is going to be accounts receivable K-Spa. So it'll go under the general column, $255, and our account will be just like we wrote it above, accounts receivable dash K-Spa. Our document number is R2. All right, one more transaction. On the 21st, we paid cash to the owner as a withdrawal of equity, $1,500. So paying cash, cash is going down. Cash is an asset. The normal balance side, the one that increases, is the debit. So when we pay cash, it's going to be a credit. Okay. Withdrawal of equity. If we go look at our chart of accounts, our owner is Norma Dirks, and when she withdraws anything, that's the drawing account. Okay. So on the 21st, Norma Dirks drawing. It is check number 6 for $1,500. So we're paying cash, so cash is going down. So cash is a credit, $1,600. Was that right? $1,500. Oops. And the drawing account, if this is a credit, the drawing account has to be a debit. And if you think about it, your owner's equity, this is where it increases. If you're taking money out of the account, your owner's equity is going down, so the normal balance is the increase side, so it has to be a debit. All right, so that's it.